Hi there, it's Emma from Millward May & Co. Today we're going to talk about the most tax efficient salary strategy for director shareholders for the upcoming tax year 2025-26. What we normally recommend as the salary for directors would be 12,570 per year, and this hasn't changed since the last year, so we still recommend this for most company director shareholders, and that works out to be £1,147.50 per month. This is normally recommended because it is above the lower earnings limit, so it would count towards a qualifying year for your state pension. It is also more tax efficient than taking dividends at this level, because dividends would be charged at a marginal rate of between 19 and 26.5% of corporation tax, whereas a salary, the maximum that you'll pay on it is 15% employer national insurance above £5,000. Often you won't pay any tax on it, or a very small amount of national insurance. So when should I pay myself more than the 12,570 in salary? Now this is a really complicated area. We have spent a lot of time working through different scenarios, and there are a few situations where it may be worth paying yourself more in a salary and less in dividends. It's a very unique situation, so I would suggest getting in touch with us if you're one of our clients, and we will actually perform a year-end detailed limited company review a few months before your year-end to make sure if this situation does apply, then we'll be considering potentially putting through a bonus in salary before your company year-end to save you in tax. That said, these are the conditions where it may apply to you to take a higher salary. So if your company profits are over £50,000, or you have connected companies, and your personal income is significantly under £50,000, and your company is able to claim the employer's allowance. Now that will only often apply to two director companies where you've got healthy profits, but both directors are taking modest incomes. And as I said, we will look at that when we do your year-end review. You may want to also consider paying yourself less than the 12,570 in salary. This could be when you're receiving other income, so you have salary from another business, you have pension income, or you have property or investment income. Secondly, if you're state pension age, you don't pay national insurance, so it may be more tax efficient to pay yourself less. And finally, if your company is loss-making, or if you're not a shareholder, so you're not able to pay yourself dividends, you may have to pay yourself more in salary. So we'll look at now the changes for national insurance, employers' national insurance from April 2025, and there were a few big changes that came into effect. So the employers' national insurance rate unfortunately went up by 1.2% to 15%. The point at which employers' NI becomes payable as well has decreased, so that means that people will generally be paying more employers, or companies will be paying more employers' NI, and that has decreased from £9,100 to £5,000 per year, or £417 per month. However, to counter these, the employment allowance has increased from £5,000 to £10,500, and we'll look at the employment allowance in a minute. So what does this mean? I guess this means that a director who's paid 12,570 will now incur an employer's NI liability of approximately £1,136 per year, and that's an increase of £657 from the previous year, which is quite significant. Even with this increase, 12,570 per year is still the most tax efficient salary level for most limited company owners though. Now let's look at the employment allowance. So this allowance allows eligible businesses to reduce their employer's national insurance bill by up to £10,500 per year. The allowance is available to most businesses who have an employee on payroll earning above £5,000 per year, or £417 per month. However, it's not available in certain circumstances, so it's worth looking at these before you claim for the employment allowance. And these are that if you are a sole director and you have no other employees, unfortunately you can't claim it. If the company paid more than 100k in Class 1 national insurance last year, employer contributions, then unfortunately the company cannot claim the employment allowance this year. And if the company is part of a group of connected companies, so you have companies that are connected by the director or by the shareholders, then only one company in that group can claim the allowance. And finally, if you are someone whose earnings are solely within IR35, so the off-payroll working rules, then unfortunately the employment allowance is not applicable to you. So on that point, in terms of the sole director point, often we get asked, should a sole director potentially employ additional staff in order to get the employment allowance? And that can be beneficial if you can pay someone additionally up to the £417 or more per month, then you will have access to that employee's the employment allowance. And this could be potentially employing a partner, a family member or a friend. Potentially you're employing them to do the admin tasks like invoicing, chasing payments, paying suppliers, bookkeeping, other duties like that, booking in meetings, etc. The support does have to be genuine and regular, and you might want to consider the following as well by formalising it, so providing a contract, an employment contract, making sure they meet the minimum wage requirements based on the hours that they're doing, paying them holiday and pension if applicable, and ensuring that this is probably the most important thing, is ensuring it's a fair wage for the work done. For example, it wouldn't be reasonable to pay £100 per hour for basic admin work. So you have to kind of imagine you're not connected to that person, how much would you realistically pay them? If you're not sure though, do get in touch and we can kind of talk you through the different options. So that's the summary of kind of the salary strategy for directors. As you can see, it's not one size fits all. It will depend on your total income, your goals, your company structure. So if you're unsure, then do get in touch with us.